Money Morning Rundown. Business First with Angela Miles.
Hello, everybody. I'm Angela Miles at the Chicago Board Options Exchange. Thanks for joining us. Coming up on the show today, timid tech, the NASDAQ stocks pro traders want now to catch a rebound rally. Investing 101, find out if your personality is killing your savings account. Millennials and money. Is JCPenney in a do or die situation with America's hottest demographic? And the $1 Million Cup of Coffee man is here to pour out his latest investing advice. On the economic calendar for today, it's factory orders, productivity, and international trade deficit. On the earnings calendar, analog, AutoZone, Bob Evans Farms, Michaels, and Toll Brothers. In market action on Monday, the Dow notches another record high. Let's get a trader's take. Joining me now is Alan Nuckman here with the Trader Rundown. And Alan, we have another record run for the Dow. What do you make of this market?
The Dow just keeps going and going. What was really important to me was last week, the S&P made new all-time highs, but closed lower on a weekly basis. So therefore, that's a key reversal, maybe a caution sign that things may slow down a bit.
Slow down, but you still want to put a play on here because there's a trade to be made here, correct?
There is definitely a trade to be made. The tech market has been timid. Now, tech, if you look at it, it's only up 4% year to date, whereas the S&P is up 8%. So look for the rubber band to snap back a bit. I'm looking at a play in the Qs, and we're trading right now at about 116.5.
So what would you do here with the Qs?
So buying some calls, buying some March calls. The 110 level, that was a level, that was a July breakout. We've been really trading between 114 and 120 now for the last few months, so that target's 126 on the upside. A lot of potential in the Qs, and the risk-reward play is bullish for that sector.
Is bullish. So what are you looking for to happen here, Alan?
Well, looking for buying the 110 calls and looking to pay about 8.5, put a stop loss at half of what we pay. So the break-even's $1 away, 3 months of time for good things to happen. And if tech can get on track, the 126 level, that option would double.
And for investors who want to track the NASDAQ, the triple Qs are a great play here.
Well, great vehicle. Now let's remember that 40% of the makeup of the Qs are made up with the big boys. Apple, Microsoft, Amazon, Facebook, and Google. So you're getting a nice chunk of the guys that have been hurt in the last couple months.
Without paying a big price.
Exactly.
Thank you for coming on the show. Have a great trading day, Alan.
Thanks, Nancy.
Topping our news, the stunning move in the blue chips. The Dow has now surged about 1,200 points during the past 30 days. CNBC calculates nearly half of the rally is being led by 3 stocks. Goldman Sachs with 320 points, followed by United Health up 150, and Caterpillar with 95 points. President-elect Donald Trump has sold his stake in Energy Transfer Partners, according to NBC News. ETP is in charge of construction of the controversial Dakota Access Pipeline. Native Americans and their supporters are protesting the pipeline. It's an 1,100-mile run that includes a half-mile of the Standing Rock Sioux Reservation. On Sunday, the Army Corps of Engineers denied a federal permit for a segment of that project. It's still possible that Donald Trump's administration will approve it. United's 9,000 mechanics are saying yes to a new contract. 51% of the mechanics voted in favor of the deal. The agreement comes in at about $1.7 billion over the current contract stretched over the next few years. And Amazon's new stores are losing the human touch. When the stores open next year, customers' mobile devices will track their purchase and become their cashiers. Now over to CME Group for today's Trader Tip.
Hi, this is Todd Colvin coming to you from the floor of the CME Group. We're looking for a trade of the day, and on the decline in yields, I think we have one. I'm looking to sell 10-year treasuries. We got them below 2.4 in the yield. I don't think it was really driven by any kind of fear. It wasn't driven by any kind of referendums, and it certainly wasn't driven by positioning. I just think the market got a little tired, and we saw the sort of the lackluster trade following the Italian referendum, and the market just sort of threw in the towel. And I think that as we head closer to that FOMC meeting and closer to year end, yields are going to creep back up. So I think this is a selling opportunity. I'm looking to sell yields, sell 10 years anywhere below 2.4. I'm looking for a 250 target at year end. After that, it's going to get a little sketchy because we have a lot of data in the beginning of January, culminating in that Trump inauguration on January 20th. So that's going to be a volatile time. You may want to have your hands at your sides for that. But I think right now there's opportunity in selling treasuries, into year end. This has been Todd Colvin coming to you from the floor of the CME Group.
Thank you, Todd. The Prime Minister of Italy is resigning. That's after Italians on Sunday rejected legislative reform measures in a vote. The EWI, an Italian ETF, rallied on the news on Monday. Reports say the vote was primarily against Prime Minister Matteo Renzi and should not be interpreted as a vote against the Eurozone. Here's what Fabrice Bonvoisin, founder of FB International, is telling us.
To me, a clear distinction between the separation between what is politics and what is really economy. Brussels expected a C or a yes from the vote, okay, the vote of confidence to Renzi. But it doesn't work that way because Italians don't support this. Europe already has a problem of communication and outreach of the people in various countries. That's the major problem. You saw that already when the EU or the Euro was established. Okay, you saw some countries saying no. Why? Is because politicians living in Brussels or even in Strasbourg, okay, live in a different bubble. And that's the problem that I see across Europe nowadays. We have professional politicians that are totally outside the real life, daily life of Italians, French, Austrians, and so forth.
Thank you for that. Now on to global changes happening at General Mills.
General Mills plans to cut about 600 jobs worldwide. The maker of Cheerios cereal is making the job adjustment as it restructures the company and eliminates the international chief operating officer position. Going forward, General Mills will be split into 4 business groups, including convenience stores and food service. The French dairy unit, where Yoplait yogurt and Häagen-Dazs ice cream are produced, will be independent from the 4 business groups. Similar to other processed food companies, General Mills has been struggling to boost sales as customers want healthier foods. Sales have declined at General Mills for the past 5 straight quarters. Investors treated the news with muted reaction. Chesapeake Energy is doing some selling to pay off debt. The oil and natural gas company is selling land and property in northern Louisiana for $450 million to a private company. The property includes 250 oil wells. So far, Chesapeake's sale of assets has totaled $2 billion for this year. The goal is to reduce its long-term debt by $2 to $3 billion. Chesapeake stock has been on a winning streak. Shares are up 43% since the election and 69% for the year. Trivago wants to go public. The Dutch travel company filed an IPO Monday. The IPO is expected to trade on the NASDAQ under ticker symbol TRVG. ADR shares will likely price around $14 per share. Expedia has a major stake in Trivago.
A new twist is coming to prepaid debit cards. Starting next October, consumers will be able to spend more than their balances. Under new rules set by the Consumer Financial Protection Bureau, prepaid debit cards will be more like traditional checking accounts. Greg McBride at Bankrate.com explains.
These lines of credit are going to be treated differently on a prepaid card. You're going to have to apply for it separately. You're going to receive a separate statement. It's going to be treated as a different account. The fact is, you're still going to pay through the nose for this. Interest rates are going to be really high. And you know, look, I mean, a lot of people that end up with these prepaid cards, they ended up with them because they had overdraft problems on traditional checking accounts. One of the beauties of the prepaid cards for so many people was the fact that it really kind of forced them into having some discipline with regard to their spending because they could only spend the amount that was loaded on the card.
Thank you for that. In our Millennials and Money report today, millennials may be a do-or-die demographic for JCP. According to Forbes, a recent survey by Cantor reveals that JCPenney is not hitting with the 35 and younger crowd. Instead, the average age of JCP shoppers is closer to 51. The report does, however, applaud the retailer's website for its exciting internet sales. Now, on to the man who's attracting millennials by creating the $1 Million Cup of Coffee.
I'm Mark Horner. $1 Million Cup of Coffee was created to help everyone take control of their financial destiny. With a little knowledge and a little discipline, you can make money work for you before you finish your next cup of coffee. So the next time you're in a restaurant or a grocery store, take a look around you. Nearly everybody you see is already or will ultimately be responsible for their own personal financial decisions. Things like paying bills on time, choosing how much house to afford, saving for retirement, and paying for college. The list goes on and on. Unfortunately, none of us are born with personal finance skills. They have to be learned, and schools just aren't teaching them. We believe there's a need for more tools out there because the cost of not developing these skills is staggering. For example, a person who starts saving for retirement at age 30 instead of age 20 will likely have about $500,000 less by age 65. Another unsettling example, professional athletes have multi-million-dollar contracts, but pro athletes get into financial trouble, including bankruptcy, at a much higher rate than the rest of us. Now, these are real-life examples of bad decisions followed by consequences. And what makes it worse is that with just some basic financial education, those consequences could have been avoided. So you don't have to be a financial professional to avoid these mistakes. It takes a little knowledge and a little discipline to make your money work for you and create a lifetime of financial freedom. Everyone can do it. So until next time, you can find us at milliondollarcupofcoffee.com or at MD Cup of Coffee.
Coming up, the coffee competition just got hotter as McDonald's brews up a brand new idea. Plus, Under Armour hits a grand slam with a new uniform deal. And our female fund managers, the answer to getting an investing and business edge. Business First AM will be right back. Welcome back. Walmart landed a perfect score of 100 in LBGT rights. The world's largest retailer was ranked in the Fortune 500 Human Rights Campaign Corporate Equality Index based on insurance coverage. A company spokesman from Walmart tells Fortune, "We are committed to fostering an inclusive work environment for our more than 2 million associates around the globe." Target, Best Buy, JCPenney, and Macy's also received scores of 100. Under Armour investors are excited about that company's major league score. Here's that report.
Under Armour scored a big league deal. The sports apparel maker signed a 10-year deal with Majestic Athletic, the official provider of Major League Baseball uniforms. The deal hits the field in 2020. Under Armour is already the league's official shoe provider with its collection of cleats. Under Armour sponsors 400 athletes and is stiffening the competition with Nike. Investors cheered the play on Monday. McDonald's is pouring on the competition against Starbucks. A major plan is underway under the Golden Arches that is intended to chip away at Starbucks' coffee empire. Bloomberg News reports in the first quarter of next year, McDonald's will bring in new espresso machines and offer a $1 drip coffee along with $2 specialty beverages, essentially half the price of Starbucks. It's possible the franchise owners may not have to foot the bill for the $12,000 coffee machines. The McCafe brand generates $4 billion a year, which translates into 16% of the company's sales.
Time now for the Business Edge. Joining us is Madison Sargis. She's a quantitative analyst at Morningstar, here to talk about the gender gap that's happening in managed funds. Thank you for coming on the show.
Thanks for having me.
Morningstar did a study of 56 different countries, and what did you find, Madison?
We found since 2008 globally, the rate of female fund management has not improved. In particular, at the U.S., we find that we're lagging behind other developed countries such as France and Hong Kong.
Why do you think this is happening?
Well, so our study was more focused on opportunities within the fund industry, not necessarily why people choose to enter and leave the industry.
You also found that there are certain funds where women tend to be hired for or are managing? What are some of those funds?
Yeah, so we find that women are more likely to manage passive funds, fund-to-funds, and socially responsible funds. And coincidentally, these are all growing areas of the industry.
So are the women outperforming men with the funds that they manage?
So we didn't actually look at performance in this study. That's something that you should see from us in the next year. We did find characteristics, female fund managers, that we think will be good for investors.
What are some of those characteristics?
So we find that women tend to be more credentialed than their male peers, and also women have lower turnover ratios, which leads to lower costs, and we know that lower costs are better for investors.
When investing, is this something that the average investor should be paying attention to? Does it matter?
Well, so we don't think that investors should make portfolio decisions based on gender alone. However, we do think that's important to study because we do think increasing gender diversity will be better for investors.
What else did you find going country to country?
So we found that certain established markets had lower rates of female fund management. The US, Germany, and more newer markets such as Hong Kong, Singapore, Israel tend to have higher rates of female fund managers.
And what about some of the larger funds versus some of the smaller funds?
Yeah, so we find that women are more likely to get a job at some of the largest equity firms. And we see that women are managing funds of all sizes these days.
Well, that is good to know. Thank you for coming on the show and for that update.
Thank you.
Coming up next, why your personality may be the reason why your savings are suffering. And in Stocking Up, is Apple poised for a major breakout? Check out our final trade of the day that is still on the way.
I'm a criminal defense attorney, and a client of mine called me Good Friday of 2010. He had seen me in a bar, and he noticed the mole in my arm, and I kept letting the message go to voicemail. After 3 or 4 messages, I listened to them, and he told me that I really want you to get that mole checked out on your right wrist. I think you have melanoma. I was blown away. I mean, I was completely shocked. The melanoma is spread to my lymph nodes. It's in my lungs and liver. If you must be out in the sun, wear protective clothing and sunscreen at least 50. Do not lay out to be thinner, hotter, sexier, or get some guy. There should be nobody dying from this disease.
Whether you have a lot of money or a little money might depend on your personality. Joining me now is Sean Hughes of Amatuli and Associates, and you actually did a study on people's personalities. What did you find out about extroverts?
Well, extroverts tend to be a little bit more outgoing, obviously, which helps them in the business place. They tend to move up quickly in companies, get executive positions, things like that, because they tend to take charge. That's the good news. The bad news is for extroverts is they tend to be impulse buyers. They spend a lot of money quickly, and they want instant reward and gratification. Now, on the other side of the coin, you got introverts. Introverts tend to be a little bit more quiet, but they are better with money. They tend to save more. They look for long-term rewards, like maybe buying a house or retirement versus spending right now.
Are they more patient?
Oh yes, they're a lot more patient when it comes to investing and saving money, so that really helps them in the long run. In fact, I've seen people that are making considerably less money save a lot more because they are introverts, so it's really interesting.
Let's take a look at men versus women. What do you find there?
Men versus women, men tend to be a little bit less patient. They want to look at their 3-month, 6-month return on their financial statements, and if they're not outpacing the market or at least keeping pace, they're not happy. Women, on the other hand, tend to be a lot more patient. They understand that they don't want to take a lot of risk. They understand that slow and steady wins the race. And oftentimes they tend to be a little bit more receptive to advice because they know they don't know all the answers, and they take more time and they research what they're invested in.
Were you surprised by what you found in the study?
Actually, I was not surprised. I see it on a daily basis in our practice. Sometimes you have a couple, you got one extrovert, one introvert, and honestly, you see one person that wants to be more aggressive and one person that wants to be more conservative. I've heard stories of advisors working with people, and they end up getting in shouting matches because they don't agree. So it can be a little bit tough dealing with personalities.
Oh my, but there is a way to fix this situation no matter what your personality, starting with automate.
Yes, you want to automate all of your savings. It seems like it's an easy thing to do, but a lot of people just don't do it. We get very busy in life with things from kids to family to jobs. So we at least want to move some of our savings into investments. Even if it's a money market account that you're going to talk to your advisor in 3 months about where you want to put it, at least start moving it out of the general fund, so to speak, so it can not be commingled and spent on a vacation or other things.
You also said to go green.
Yeah, you want to use cash when you can. It's okay to use a credit card if we're going to build credit, but don't use a credit card to go buy a new car or a new toy if it doesn't align with your budget. One of the other things you can do is you can make a budget using Microsoft Excel. They have easy budget templates, and you want to see if it aligns with that budget.
You also say to play the waiting game.
Yeah, you want to wait, general rule, at least 48 to 72 hours when you buy something. How many times have you gone to the store and seen something you wanted?
A lot.
So we need to slow down, take our time, breathe, and sleep on it. Sleep on whether or not this is the right thing for you, but not only you, think about your family, because oftentimes we think about what we want, but life is about helping others and thinking about our family. So.
Or wait for the sale.
Yes, wait for the sale, and don't think that the sales come on Black Friday because they're year-round. You just got to find them.
That is true. That's what I do. Thank you for coming on the show, Sean.
Thanks, Angie.
Still to come, why one trader is picking Apple as an investment and a trade. Stocking up is next. Joining us now for Stocking Up is Joel Hawthorne, and he is stocking up on Apple. Glad to see you.
Thanks for having me, Angie.
So why Apple right now?
Well, I really think that Apple right now is poised to continue to trend higher with the overall market direction. And I think right now, just before holidays, everything about this stock I really love. I think right now we'll see the stock really gain some momentum out until the beginning of the calendar year of 2017.
Are you playing Christmas sales on Apple at all?
I'm considering it. But I think right now what's definitely more important to me is just the overall market trend. I think right now we've seen the market trend higher consistently and very strong, and I've seen nothing be able to stop this market direction. I think Apple, being a leader, kind of grabs the market by the horns and drags it along with it as well.
What would be your option strategy on this one?
I'm a heavy call buyer. I like the 115s out to about February 17th. That gives me enough time that after holiday sales, as you mentioned, after that data kind of comes in, after we kind of can see, after the Fed makes a decision here in about a week or so, I think we can kind of really see the stock have some momentum and head higher.
So with that strategy, what are you projecting as your top stock price on Apple next year?
Next year, I would think I would like to see about 122 actually.
Really?
Yeah.
Oh, that would be a big move from here.
Yeah, I think we.
But
can
possible. We've seen it before in Apple.
Yes, indeed. And I think right now this stock is poised to really hit about 118. It wouldn't shock me if out by March, maybe even April, we're at 118. But I think 114 or so, 115 is definitely in the cards here in the first quarter.
Well, thank you for coming on the show.
Thanks for having me.
As we roll out of here for today, a reminder, we are on social media. It's Business First AM on Facebook, YouTube, and Twitter. Coming up in our next show, it's another Marriage Money Gem with Gemma Allen. Thank you so much for watching today. From all of us here at Business First AM, have a terrific day.